And it is very interesting to note that in case of this financial analytics, two things are very important. One is share market. Even in case of share market, that is in capital market, we need credit analytics nowadays. Because suddenly if the share price is coming down, you are ready to buy the share. You may not have money with you by the time. You need credit immediately. That is the purpose. In case of Dalal Street, you can see the five very important company shares price is slightly coming down. They are ready to buy. By the time they need lakhs and lakhs rupees. So what these people will do, they will go for credit and they will get the credit immediately. In some cases, even the credit will be given for hourly basis. 1 hour, 0.2%, like that. So credit analytics is also very important. Of course, in next semester, you will study in very detail about these credit analytics. Okay. So in this semester, we are going to discuss some basic concept in the credit analytics. Followed by that, we will discuss the investment analytics, especially in the form of systematic investment plan. That is what we are going to discuss. Okay. So be attentive, ready. We will start with a nice podcast, what I shared with you. Still there is no response. I thought at least 1 or 2 students will respond about the news, what they are reading. Try to respond nicely hereafter. When there is a podcast has been mentioned in the WhatsApp group, you must understand. My aim is your reflections, your feedback. Feedback in the sense, I have posted today, need for data-backed smart solutions in finance. You can give some comments about that one. Why there is need for data-backed smart things. Okay? Try to give that one. That is the role of the MBA students. So today, I have referred this very interesting news. It's also related to our subject today. The most of the analytics are nowadays concerned with the data-backed smart solution. In marketing, we used to call it as a data-driven approach. Same thing here. We need the data-driven solution. Simply speaking, the proof. Without proof, we can't do anything in case of credit analytics. Same thing here, it is mentioned that most of the finance analytics is moving towards the data-powered smart solutions. You are able to do the work very smartly. Same thing in finance analytics students, by seeing the data visualization nicely, you are able to comment. That is the smart solutions you are able to see. A customer may call anytime, at any place, at any moment, but you are able to answer immediately. That is how you must know to give a nice smart solution. That is why you are studying that one. You can see in this news, the author clearly mentioned about the digital lending. Every day the banks are calling the customers, whether you need loan, we are ready to provide loan for 2 lakhs, 5 lakhs, everything. Now the lending is moving on to the digital lending. Once upon a time, it is not like that. They will call to the bank, they will ask who are you, where you are from, they will ask historical background, everything, and they will tell, okay, bring some documents, you have to submit the document, you have to wait for 2 months to get the credit. But nowadays it is not like that. Within 2 minutes, you are able to get the credit. See that one, how far the world has changed because of the digital lending. How these people are identifying that you are able to get the loan. That is interesting thing. That is what you are going to study, the digital lending system. And whether the loan will be repaid correctly, what is the risk associated with that one. And these fintech companies are now coming. How these fintech companies are ready to convert the loan into an asset portfolio. These are very interesting thing in the analytics nowadays. All these things are happening within 2 minutes. Very interesting to see that ICICI Bank mentioned in their annual report, they are able to sanction the credit within 30 seconds. Think about that one. How far the payables and receivables management are going on. The time-based analytics, it's going for 2 months, they are going to sanction within 30 seconds. We expect you to be like that in future. That is what you are going to study, that one. Another thing in case of credit analytics, as per the author, he mentioned about the fraud management. Whether the person will repay or not, whether he will move out of the country, you can see there are numerous examples are going on. The person is borrowing the loan, huge loans, and moving out of the country. And some of them are defaulters. Some of them, they are unable to do anything. They are said to be defaulters immediately. That is why we need analytics. Once you are going to sanction the loan, once you are ready to finance somebody, you must know the capacity of that person and within how many days he will repay, whether he is a good customer, bad customer. Another important thing, the risk level of the loan. Okay, these are all very nice things, and nowadays all these things we used to call it as credit management. In case of credit management, we are discussing that one. So here you can see this credit analytics is purely based upon the concept called credit analysis. I think some of you studied in financial management as well as in case of your project, you studied about the credit analysis. How far we are going to take? I think you might have calculated the ratios. That is debt equity ratios first, then you will calculate the current ratio, liquidity ratio. All these ratios you used to calculate. Why you calculated before giving the loan? You will see the liquidity and profitability. Without seeing the liquidity and profitability, you won't give the loan. Same thing. In case of credit analysis, we will see the applicant loan request. If the applicant may submit his balance sheet, if he is doing the business. If he is a customer, he will not submit any balance sheet. We have to see his income level. But his balance sheet will speak about the credit worthiness. Once by seeing their balance sheet, you will give the loan. That is very old story. So in case of credit metrics, there are a number of factors involved. You can see first who, what, and where from. This is practically done once upon a time without system. Whom we are going to give loan, what is the purpose of the loan, where these people are from, we have to know. Finding out the individual characteristics of the customer. The customer may be a business people. In case of business people, how far the business is running successfully or not, we have to measure. That is the purpose of the credit risk analyst. You can see that one legal party is essential, where they will repay, whether they are having the capacity to repay, then only it comes the business risk. We will see what are all the 4 C's and 3 M's. I think capacity, credit level, all these things. Then only the documents will speak. Based upon the documents, the risk, financial risk. What about their profitability? What about their revenue earning capacity? What about their debt capacity? Whether they have borrowed more debt, what about their liquidity? That is the second stage. And last one, we have to fix the internal triggers in decision making. What are all the key factors to give the loan? That is quite interesting thing in case of profit analysis. Once upon a time, by seeing a face of a particular person, they will know whether you are able to repay or not. Face recognition. But nowadays it is not like that. The system has to give the output. That is why in traditional method, the liquidity metrics are there. These liquidity ratios. What about the debt equity ratio? Whether the debt equity ratio is less or more. Then efficiency metrics, which refers to the gross profit ratios, everything. Whether their payment capacity, revenue earning capacity is good. That's what the efficiency metrics is going to say. Efficiency metrics means whether a particular body corporate or a shop or an individual or a business firm is able to achieve its target of revenue, whether it is having the capacity to earn revenue. That is important before giving the loan. That is why we used to measure the efficiency ratios, how they are controlling the expenses, not reducing the expenses, only controlling the expenses, and how these people are increasing the revenue, how far they are giving importance to the ROI. These things will be reflected in the efficiency. Now we are having the software to measure. We are going to see today. Then the leverage metrics. You have studied about the financial leverage and the operating leverage. A small change in profit. How far it is going to get the benefit? If a sales is increasing by 10%, how much it will have a reflection in profit? That is the leverage. Dear students, these are all things you must know before giving the loan. Then only the profitability. What is their profitability for each and every transactions? Then it comes the future earnings. We can estimate whether the person is able to earn very good money in future. Recently, I have seen one of the video which was surrounding in the WhatsApp. All the pharmaceutical companies, it was gaining high momentum and they are getting huge profit nowadays because of the anticipated third waves of COVID. Before starting the COVID, these pharmaceutical companies were running at loss, most of them. We don't know where these companies suddenly came from, a mushrooming growth of the pharmaceutical companies because of this COVID, and they are now dominating in the market. Even in case of capital markets, pharmacy companies' share prices are in peak because of this COVID. And they are giving much importance about the COVID, and whether it is true or not, the rumors are coming. But you can see their future earning capacity is good. In those days, it was not like that. For pharmaceutical companies, the pricing is very, very least. But now it is not like that. The pricing is moving in a different direction. Then only the growth metrics. What is the market share of this company in the total level? That is important. How far an organization is controlling the total share in this market. These are all the theoretical items what we will consider. In addition to that one, I think 5 C's concept we might have studied. What is the character of the organization? That is, if it is individual, what is the character of the individual? The capacity, condition, capital, collateral. Collateral means security. Who are ready to provide the security for the loan? That is also needed. If anything goes wrong, somebody will give surety. Somebody will give guarantee. If Kiran 1 is not good, Kiran 2 will give guarantee for Kiran. That is his collateral. In case of Sanoj example, Sanoj is unable to do, Jason will give the guarantee. That is the collateral. Their friends will give the collateral. It is quite common. If Nandish is ready to borrow a loan, Nandish will ask Hemant, Hemant, give me a collateral. That is, Nandish is ready to give surety sign for the Hemant. If Hemant is unable to pay loan, these people will target Nandish. That is the collateral. In those days, it is possible, but nowadays, how far we are going to find out. That is why nowadays we are creating some metrics for that one. We need some data for that one. It is based upon the debt markets also. What is the debt? What is the pricing, yield, spread, and credit metrics? Yield means it is also from the debt market. If you are going to provide loan, what will be the income of that one? The spread means the difference between the interest rate of deposits and interest rate of loan. These data we used to get. For that purpose, we are having the nice metrics, that is yield, EYTM, that is yield value, spread, maturity period of the loan, duration of the loan, then the ratings. Now there are credit rating agencies are there. They are also coming here. They are also measuring before giving the loan. If the corporates are asking loan, we can go through the credit rating agencies. They used to measure nicely about that one. Traditionally, we followed all these very old ratios, liquidity ratios. You know about the liquidity ratio, the standard ratio should be 1:2. Profitability ratios means it depends upon the organization. Now it is 30%. Efficiency ratios around 15%. Cash flow, it should be an increasing trend. Collateral, at least 2 collaterals are needed. Then only we will go for the SWOT analysis. These are all the very olden things. We are using that one for the purpose of finding out the credit things. But nowadays, it is moving in a different direction. We used to find out the financial covenants. That is the benchmark to say that this organization is healthy one. Financial covenants refers to your debt equity ratio, interest coverage ratio, all these things. Whether this ratio is strong, we can go for financing or we can go for giving the debts. In addition to that, to measure the efficiency of these organizations, what these people are saying, they are moving towards the non-financial metrics also. What is the brand value of the firm into whom we are ready to give loan? If you are going to give loan to an individual person, what is his brand? Then how far it is doing well in marketing side, customer experience, whether the organization is having an innovative capacity, market share, customer retention, this won't be reflected in balance sheet. That is why it is called as non-financial metrics. So usually, these are all the things included in the very olden stages of the credit analytics. But nowadays, it is not like that. More things are coming now. Nowadays, we are having the software to measure the financial net worth as well as the credit analytics. So, number of softwares are coming nowadays. Let us see some of the softwares used in case of this credit analytics, okay? Yes, I am sharing the screen now. Are you able to view the screen now?
Yes, sir.
Okay, very good. You can see, we will see some of the examples of the credit software. Here is one interesting software. Even today news, it is very famous, CMS Credit Suite. And this credit suite is a software. It is used along with the financial information. If you are ready to provide loan or if you are ready to give debt to an organization, you can measure the credit worthiness of that organization using this software. Usually it contains the dashboard. Very important thing, even if you want to give a loan to an small persons, you can give based upon this one. That is the CMS credit suite features. It will show the dashboard. If Pramod is asking the credit, immediately how the banker will do. Pramod is an individual. Once the information has been inputted by the Pramod, the organization who is ready to provide loan will go through the dashboard. The dashboard will tell about everything about the Pramod. Based upon that, the analytics person only take decision, not the system. Okay, the dashboard has been given. In the dashboard, they are having the scoring. What is the score for the Pramod? Nowadays, we are having the CIBIL score for credit for individual, but this is for the firms or even the big organizations. Then the credit, what are the terms of credit we can give, and whether these credit terms will be acceptable by this customer. Then what are the collections we can do? Then what is the financial position of that one? Then very important thing, even the family nature. Family in the sense Pramod may run a business, let us assume means Pramod is having number of sister concerns. All these things these people used to identify and target how their sister company is doing. Then only it consists of query builder, cross-browser support. You can see some of the dashboard of this organization. That is the rating given by that one. Like our speedometer, here is the rating. You can see the rating average score will be given. So if Pramod has applied, his average score will be known by that one immediately before sanctioning the credit. If Pramod is running business, for his business score will come. You can see that one based upon the financial statements inputted by the Pramod. It won't take decision simply. It will consider all the facts. The overall score of the Pramod, it will be mentioned here, 4.33 in the 6-point scale, it will show. If it is in green line, the loan will be sanctioned. If it is in red line, the loan won't be sanctioned. That is, it will show only the color combination, but it is your duty to take the decision. That is how these people are creating the things. Yes. Scores. The method of creating these scores, you can see the current approval, current model recommendation, what is the credit request rate, amount received, how much you can evaluate, what will be the thing, how much high credit we can sanction, what is the low level of credit we can give. All these things it will measure. The summary, detail, family, claims, the write-off. If the loan is given for 5 years, whether we are able to recover, whether he is having the fast recovery of collecting. You can see that on the score, it will display for each and everything individually. So that by seeing that one, we can take nice decision that whether we can go for credit availability or not. That is providing credit or not. You can see the sister concerns. The family refers to the sister concerns of that organization. Then if you want to ask some query, it will create a query builder and reply through the structured query languages, SQL. That is how these persons are using that one. Of course, I am showing the version. You can go and see in the internet and find out a demo version and run. Simply, you can input a balance sheet and find out how it is going on. You can have a nice demo of the CMS credit suite. So credit suites are now available. You need not go for very old 1942 love story. You can use the present softwares for that one. Another interesting thing. Here is the high radius organization. They are also providing the different one. They are having the real-time credit risk monitoring. What is the thing going on at present? And they are also having the AI-based remittance system, that is artificial intelligence has been used. Let us see their demo of the time credit risk monitoring, how they are measuring the time.
Every day, your
Whether you are able to hear their sound?
At-risk customers with hundreds of customer portfolios, it is difficult
Yes, sir.
to review and track the frequent changes in their credit profile. The traditional concept of reviewing a customer once or twice a year is not effective anymore. With high radius, real-time credit risk monitoring, your credit teams can monitor all of their portfolios on a daily basis. They can track real-time changes in the customer's credit profile, payments profile, and filings to identify the critical customers and reduce bad debt. Let us understand how this happens. Every day, your credit teams receive real-time alerts related to customers' credit profile updates. For instance, if the credit score drops by 200 points or a customer files for bankruptcy, the solution automatically pulls in the latest credit report and financials to rescore the customer and update the credit limit. Through an automated approval workflow, various stakeholders within the credit team can review and approve the revised credit limit. Once approved, the latest credit information, such as risk class and credit limit, is automatically updated in the ERP. Book a free demo and get started in just 30 days.
Yes, that is how they are using the real-time credit risk monitoring system. That is, they used to find out by stage, and they are having their own networking system. They are maintaining the data and they are having the past record. Based upon that, the real-time credit risk is monitored nicely, so that we can know whether our customer will give, or if we have provided a loan, when he will attain the peak season of revenue, how far we are able to collect. All those things we are able to find out from this credit risk monitoring method. It is a nice software, use that one. I think I can know that even few Indian banks are using. But coming to the advanced version, we are having the artificial intelligence based system also. If you are unable to predict the remittance system, it will identify. Simply example, if Kiran decided to provide a loan to his own friend, Vikas, so Kiran is providing loan to Vikas. So Kiran is identifying the debt worthiness of the Vikas. And there are a number of loan buyers from Kiran. So he can't identify where the Vikas. So what Kiran will do to get the prediction, he will identify last 3 or 4 times when Vikas has refunded the money, that is interest rate, everything, and when he is repaying the money, all these things he will identify using the machine learning system. The best method is KNN algorithm. He will give some training variables to find out whether we are able to get back the money from Vikas or not. So Kiran will train some of the variables so that he will know clearly the date of repayment or interest rate from the Vikas. If everything goes on wrong, then only Kiran will appoint some gundas and he will threaten the Vikas and get back the money, provided Vikas is running the business. In legally, it is not possible. So the loan given by the Kiran to Vikas is considered as the bad acts. For this purpose, now we are having the nice method in high radius system. It is called as artificial intelligence based missing remittance prediction. How far we are able to predict that
without
one.
sending the remittance information. As a result, your cash application teams have to spend a lot of time making requests for the missing remittance from the customer. Multiple interactions between cash application teams and customers not only impact the customer experience, but they also slow down the cash application process. High Radius Cash Application Cloud leverages AI and machine learning algorithms to predict invoices as remittances against a particular payment. Based on your past analyst actions, AI recommends a set of invoices that can be potential remittances. Your cash application analysts can then make a decision based on the confidence score and choose the appropriate remittance against the payment. Additionally, Cash Application Cloud integrates with Collections Cloud to scan and identify any open payment commitments that can be treated as potential remittance advice. Your collectors can also create remittances while speaking with your customers. The collector submitted remittances are then automatically fed back to Cash Application Cloud. To learn more, book a free demo with High Radius.
Yes, that is how these people used to find out the remittance. Each and everywhere they are having their own system. Okay. Even you can see the remote deposit application is also there. Cash remote deposit capture, integration of collections to handle no remittance scenario. If a person is not at all remitting, even they are able to know that one. For that purpose, they are having the integration, how to handle all those things. This is another system used by the high radius one.
Whenever your cash application team encounters missing remittance information, they reach out to the customer. Not only does this create a poor customer experience, but it also slows down the cash application process. High Radius Integrated Receivables helps your cash application team to access necessary remittance information without interacting with the customers. With High Radius Integrated Receivables, you can let your collectors create remittances and consider payment commitments as potential remittance information. Cash Application Cloud seamlessly integrates with Collections Cloud to scan open payment commitments for potential remittance information. A payment commitment is considered a remittance if the payment amount and date match the promised payment amount and date. Additionally, your collectors can also capture remittance information when speaking with customers, key it into an integrated portal, and automatically push the remittance recommendations to the cash application team. To learn more, book a demo with High Radius.
Yes, you can see these are all the normal one in which they are having the credit rating system. So these are some of the advancements coming in the credit rating. So as a student, you must know different softwares you can use in case of the credit rating. Okay. That is why I've shown that one. And of course, we are having the High Radius Credit Cloud. That is the one of the software we have discussed. Another one is Activate. There are a number of softwares. You can see some of these softwares. CIFO here, Magia, Seat, Bactron, Max Credible. These are the softwares which can be used for the credit analytics nowadays. So if you are going and sitting in the finance organization, you will do same thing. It is your duty to use the software and find out the credit worthiness of the customer. That is the advantage of that one. That is why nowadays in analytics side, they are using different softwares. Of course, the softwares are only integrated with the SAP or any one system. It is highly impossible to integrate. Otherwise, we can't go for the software in credit analytics. Okay. Let us move on to the second part of the thing. Like credit analytics, nowadays we used to call it as investment analytics. Credit analytics, we are giving like a debt, debentures. This is also a very good investment. We are giving to somebody as a loan. For that, we are getting the income. In case of investment analytics, it is the opposite side. We are going to invest our amount in somewhere as a customer. For that purpose, we are having the strategies called marketing strategies, especially if you are investing in the debt segment. Very interesting strategy, and this strategy depends upon the systematic investment plans only. You should be very clear with the systematic investment plans. So for this purpose also, there are a number of analytics there to find out the marketing strategy. The marketing strategy is nothing but how much investment you can make. First, you will make a small investment, that is called the first bucket. In the second stage, you will go for a big investment, that is the medium budget. After that, you will go for a very big budget, that is the third bucket. So usually your behavioral part will be like that. That is why we used to call it as marketing strategy. And all this marketing strategy depends upon the systematic investment plans. That is another interesting thing. You must know how the systematic investment plans are done. Okay? Yes. You can see I am showing a simple example of the systematic investment plan used by the IFL securities. That is a nice investment analytics given from the systematic investment plan calculator. Okay, they created a nice systematic investment plan calculator, and in this website also you can see the share price movements and what will be the estimated income you will get if you are investing in this SIP. So this is another interesting fact that you can go for calculating your returns using the systematic investment plan calculator. Okay, are you able to view this one? What happened? Ivan?
Yes, sir.
Okay, good, Megha. Okay, let us see how this is working. This is created by IFL Securities, and you can see they are telling the present condition, the gold rate, Nifty, crude oil price, everything they are running. Let us see how to calculate using the SIP. Here there are three columns. Amount you want to invest, how much you will invest, they will ask. Based upon that investment and how many months you are going to invest, what will be your expected return. Based upon that, it will showcase your returns here. Okay. Let us ask someone. Because are you there? What?
Yes, sir.
Yes, because assume that you are ready to invest.
Yes, sir.
From now onwards, how much you will invest per month? Assume you are having a salary of 1 lakh.
50,000, sir.
50,000. Oh, because it's very, very positive, man. No, you won't spend any money for you.
I'll spend 30,000 for me.
Huh?
I'll spend 30,000 for me, sir.
Only 30,000 for you. Okay. You can see because he's having some dream. So let us see if the amount invested by the Vikas is 50,000. Okay, I'm moving the cursor. Yes, the amount he want to invest is 50,000. So because he's having the dream, how many years he can go for? Okay? How many months? Here it is given 10 months, 10 years. Because how many years you are going to plan to construct a new bungalow for you?
In the next 20 years, sir.
20 years. It is true. Your dream is, your payback period is very, very far away. 20 years means you will get married, you are having a kid, he will also grown up, and he will ask money for his education. It is too much, 20 years. That
In the
is,
next- in
yes,
the
it
next
has.
3 years, sir.
Because he's having the plan to go for around, let
10
us see, 10 years, okay, 75 months. So how long you will invest? You will go for yes. Okay, 70 months. What he will get the expected return? What he may aim for the return? Usually the return we won't say. The normal return is now only 12% maximum. So if his return is 12%, you can see the expected SIP returns. The expected amount, he might have invested around 35 lakhs. He will get only 50 lakhs after 70 months. That is what the SIP is saying, systematic investment plan is saying. This is called the bucketing strategy. Of course, first time, because we go for the first bucket, very short-term investments. He will invest for very short term, that is the first bucket. Then he will move on to the second bucket. Then the third. Third is the very long period time. That is called the bucketing strategy used. So you must know the SIP. SIP means systematic investment plans. They are using the systematic investment plan for the purpose of bucketing strategy. See that one. And these investment strategies, they are using the investment analytics, what we have seen, especially calculations, everything. The bucket one refers the short term, that is the current spending, because needs money. For that purpose, how he is doing that one. He may borrow money from his friends or he will give. Bucket two is the income bucket. Based upon the income only, he will decide about how much he can invest. Finally, the growth of the investments. So the investment plans are now, they used to classify under the bucket system. How to invest in the savings, money, all these things comes under the first category, that is if he is planned for a maximum 1 year investment. If his investment is planning for 4 years, it may comes under the unit of investments. 48 months, he may go for investing in stock share market. More than that one, it is based upon the infrastructure. Okay, that is what we used to call it as nicely the bucketing strategy. Usually, when you are planning for the investment, the 70% of the investments will be in cash and bonds. That is the thumb rule. And last one, you will plan for a very big one. Anyhow, there's a risk factor of going upward and downward. That is called as the third one, that is stock investment. These strategies are called as the bucketing strategy, the bucket plan, 3-bucket approach. The short term, medium term, long term, we used to call it as the bucketing strategy. Based upon that, you will consider the investment. Say, for example, in bucket one, you'll consider the cash investments. Bucket two will consider the fixed income assets. You will deposit in the fixed investments. And bucket 3, you will depend upon the dividends from different companies. That is how we used to define the investment strategy of the human being. First bucket is for emergency and liquid purpose. Second bucket is for 3 to 7 years. You will plan for the fixed income. And third bucket is the smarter one. You will go for investment in share markets or capital market. You are ready to take more risk. That's what this bucketing strategy is saying. As per this bucketing strategy, all these things depends upon the metrics in investments. What are all the metrics we have already studied? It is based upon the beta, that is the risk value, then the Sharpe ratio, standard deviation, then R square value, finally the returns, that is the alpha. What we have studied in the first practical nicely. Okay? So you know the alpha is the expected return of the portfolio. We have studied. The standard deviation, which is considered as the variations. We have studied calculation of standard deviation. Same thing, then we studied the Sharpe ratio. How in portfolio management we are using the Sharpe ratio. Same thing, I think some of you have studied in portfolio management. If the Sharpe ratio is 1, what will be our decision? If it is 2, what will be our decision? Same thing. Then we'll see the market shock. Based upon the market shock, it is the jump effects in the market, we will go for the investments. Usually the investments are also called as the crowded trade. Because based upon the demand and supply, crowded trade means more demand for a particular security in which the returns are high. Okay? If the demand and supply is moving in the right direction, there will be more crowded trade. The investments are based upon that one. Then you will plan for an equivalent share. What you have decided in the value at risk. Investments are based upon the financial shocks. That is the jump effect. What we discussed at the value at risk. So these are all the investment metrics you must know before going for the investment. So as a conclusion, what we studied today, the credit analytics. What is the purpose of credit analytics? What are different softwares used in credit analytics? Then coming to the investment metrics. What is the different types of investment in bucketing strategy? What are all the metrics we are using in investment strategy to find out whether we can invest or not? It is purely based upon the beta, alpha, Sharpe ratio, trainer ratio, the R square value, as well as the standard deviation. Okay. With this, we will conclude today's class. I hope you are in online mode. I am unable to see your face. As per our rule, first 10 minutes and last 10 minutes, your camera should be on. Okay. Now I am seeing some of the face. Pawan is there. Yamini is there. Okay, students, we will conclude today's class. Wishing you happy Logri Makara Sankranti, Pongal, or if you are in Northeast, Bihu and Guddi festival. Thank you. Bye bye. We'll meet on Tuesday. Bye.
Thank you, sir.
Thank
you,
you.
Thank you, sir.